We're on the floor of the CME group, July 1st on a Thursday, the first day of the start of the third quarter. Top-notch trading here with his friends from Mr. Top Step. Anyway, I'm on here quickly. 2 days ago, Top-notch trading was looking for a possible low of the new year 31 to 29, and the low that day was 30.5. However, Top-notch trading said if they decided to go, they're going to go for a big fib objective of 10.0660. Voila! Turn to the board. We got a low right now of 0.6 in the S&P, 0.6 even in the mini. It's imperative that these ideas work in correlation with the bonds and the treasury instruments, because right now the fundamentals are having their way with the markets. Top-notch trading did put out a bond level today at 128.18 with a high 128.19 right now. We did find a high of resistance, therefore the 0.6 level, 0.6, beautiful. But I'm not sure if the move to the downside is over. I would like to see another trade above 21 today if there's any chance to catch another bid. So far, the S&P has seen a rally of up to 17.5. That's not a bad bang for your buck if you got these 0.6 halves today, $11. Anyway, if I see a move down below 27.27 in the bonds with the 27.25 offer, Top-notch will be looking for new highs at some point today. Key level of 24.5. If we catch a 21 bid, 24.5 remains to be seen, but so far so good. Overall, another move south. Watch out, 984 to 982. Not today though, ladies and gentlemen. See you later.
Thanks, Tim. It's good to have him around. And as we've said many times, Tim started over at the old Dean Witter's desk, and he was the guy that did the technicals there. And he's been on the floor for the last 20-something years. So you know what? When it comes to this, he really does have his levels down pat. And as crazy and as goofy as he may seem, that's where he focuses on. That's where his life's objectives are. It's right here in the S&P. Now, you know what? We're going into the unemployment figures today, and we got a 9 o'clock shocker. 3 different numbers all came in at the same time. Construction spending, ISM manufacturing, and I'm sorry, pending home sales, all came in lower than expected. The S&P just went whoosh. And then in came those sell programs that we've been talking about. Now, as we've tried to explain, or the desk has tried to explain, you know what? In a bear market, the program levels tend to trade at deeper, steeper discounts throughout the day. And if you can find someone to explain this to you, it's right now, I believe, fair value is around 435. So what you do is, because the futures, because the S&P spread is trading at a discount to the futures now, what you do is you take that discount and you add about another $1 lower from the fair value, and that will put you at sell program level. So in other words, like $5.50 discount to the futures, you'll see those bids in the mini, and as the market starts coming down, you'll know what's going on. You got to follow these programs. That's what it's all about. It makes up 70% of the daily volume here. Okay, now, as we've said, we've had a couple of good calls and a couple of bad calls this week, but what we did do is we did say 980 in the equity report about a week ago. Now, this is a number that's been sticking out in our mind. One of the guys at the desk said it. It was a big resistance level on the way up before we got above 10 even. So, you know, everybody's going to have different levels on the way down, but it really does look like we're heading down to these levels. Like it or not, it's not a good scene, but you know what? It's just the way it's going to go. Too many things are starting to pile up within the government regulation stuff. The markets have been so overbought and waiting for a downside reprieve, and we're getting it, and nobody likes to see it. Other than that, we started out with about 435,000 minis today, and we've got about 2 million minis. So that's 1.6 million minis going at 11:24 Chicago time. You guys keep asking for us to put out a time. That's a pretty significant number. Also, the other part of it is the unemployment figure tomorrow. Now, one of the things that we're really concerned about is that these numbers will not meet what the street's looking for. If that's the case, now this is an important point, and I think it's something that everybody should listen to. If that's the case and the market opens sharply down, if it opens sharply lower tomorrow, as we've said all week, we don't want to see the market get too oversold in front of the number. If, and this is a big if the market opens sharply lower and you have 400,000 to 500,000 minis traded before the 8:30 open tomorrow, we suspect a big bounce. that rule comes into effect mainly on Fridays. It's mainly when you have oversized GLOBEX volumes on a big important economic report like the unemployment figure. As far as the rest of the day is concerned, I think Tim's right. You know, we've already seen this big down move. We got down to his 06 level. We've had a pop up to 17.5. We think we get back above 16.5, 17.5 again. You'll see 22, 23, and then that 10 handle rule will go back into effect, which would be the 1026.5 level. You know what? Right now we're into the noon balloon. It's quiet throughout the floor. The bonds are still up 23. We're still down 15 handles. So that buy bond, sell S&P thing is really going hard over the last couple of weeks. Okay, and that's a predominant trade that's within the market. Now, the funny thing is, crude oil is down today, and the euro currency is sharply higher. So there's been a little bit of a detachment between all these guys that have been working together on the downside. We'll try to be back tomorrow morning. What we're really planning on doing, we're planning on doing some morning updates, if we can get Andrew to go along with it, and try to get something out before the market opens. And then we'll do our 11 o'clock, 11:30 update, which will give people a little bit better, a clearer view of what we're seeing early in the day rather than giving it to you all at once like at 11, 11:30. The other thing is, like we've said, it's no laughing matter. I did chuckle about it yesterday. Go to drakencapital.com. Hit on the futures monster, click into us, get a look at what we're talking about. And again, we're not right every day, and nobody's right every day. But you know what? Get with people. The pit bull said a long time ago, follow the guys that make money. Stick with them. You know what I mean? It's Tim right now is on fire. So you know what I would say, we do make some good daily calls, and today when the S&P sold off down under 11 even, we came out on the IM and said that we were going to get long right here. Now, we made one mistake with that. We should have waited for our levels to come in to play. The 06 half level was something that we had been putting out 06 to 06 half. So if that IM had gone out when the market was trading 07 even, that would have been golden, because the thing never looked back. But we got in front of ourselves, and the main story here is to be patient in the S&P. If you're clicking away all day long, you think you're getting in, getting out, all you're doing is making the clearing firm money, and you're more than likely losing in your own trading account. Beyond that, we'll just leave it as patience is a virtue. We'll see you tomorrow.